I don't I have a kind of strange opinion of capital expenditures, right? So the way that we purchase properties is we factor that in. Our formula that we use is purchase price plus rehab cost is 75% or less of the after repair value. So that rehab cost, like if a property needs a new roof, then we take that off of our initial offer. And when we close, we go ahead and put a new roof on the property. So the idea or the concept is we kind of like front load these capital expenditure items. So if the furnace doesn't work, we replace it and we factor that into the acquisition cost. And we've been doing this for about 4 or 5 years now. So we haven't done this for longer than some of these items last. So perhaps I would have better stories about budgeting or managing this, like the capital expenditures, after we have been investing longer than water heaters and furnaces and roofs last. As far as maintenance goes, I mean, I really have an issue with the way that most people calculate the numbers on their rental properties. And I find that, putting like a placeholder of 10% for repairs or capital expenditures is a real waste of time, because that's not how it goes in a property. And you can't pay your contractors or your maintenance people in monthly payments of 10% of the rent. So I think that these people that want to act like they're being really conservative in their numbers and estimates are like, pacifying themselves by adding these percentages as placeholders when they don't actually correspond to reality, right? So if you've got a property and you rent it out for $900 a month, 10% for repairs and maintenance would be $90. But let's say your plumbing goes out, 3 grand to fix that issue. Where's that 3 grand come from? Not your $90 a month. So there's 3 years of that repairs maintenance budget that you had to go ahead and front. And then that doesn't mean that you're not going to have another sort of repair, right? So, doing like a P&L on an annual basis might provide a little bit of a snapshot, but not the full picture of that property. I mean, having a large reserve is beneficial. And then also the way to create a sustainable portfolio in real estate investing is through quantity. So like once you get enough properties to start benefiting from like the law of large numbers or the law of averages, whatever you want to call it, where if you've got 10 properties, then the cash flow from all 10 of those properties is sufficient enough to cover whatever repairs and maintenance task or item that comes up on one of those properties. And the chances that all 10 of those properties need some type of repair or maintenance in the same month start to become pretty slim. I've got a small background in insurance, so I can say that one of the things that I know about insurance is it would be impossible to provide insurance on one vehicle. So an insurance company couldn't possibly collect enough premium on one vehicle to properly plan or protect that one vehicle from all the things that could go wrong. However, if that insurance company provides insurance to 5,000 vehicles, then you can start charging an affordable amount for a monthly premium. And the chances that something that go wrong in the same month with all 5,000 of those vehicles are highly improbable. So when it comes to building a portfolio of any size in real estate investing, you can't budget your way with 1 or 2 properties in a conservative manner. So if you've got 1 or 2 rental properties, then I would most certainly expect that at the end of every month or when any issue comes up on those properties, you're going to need to sit there and figure out how much money you're going to put into that to cover those. However, as soon as you get 10, 20, 30 properties, then the cash flow from all of those are going to be sufficient to cover the repairs and maintenance and any sort of capital expenditure item that comes up.
Thanks for watching that clip. I thought that was a good question. And I think you can ask good questions too. Join us every Friday morning at 8 a.m. Eastern Standard Time for a live stream Q&A where we answer plenty of questions just like this one. In the meantime, consider subscribing to the channel if you want more of this content. And if you want to increase your deal flow, analyze properties better, and help me feed my family, click the link below for a free 7-day trial of PropStream.